Hi all, this is E. Just want to do a quick update, a review of yesterday's activities, and a few housekeeping notes. For those members, if you are looking for the transcript from yesterday's chat room notes, look under Notes for Members, click on that, and the password that I've sent out to everybody will work for that and will give you full access to take a look at the full transcript. If you are not a member but would like to see our free videos and charts, I try to post rather than just a blog these days. I do post some videos and charts, and the things that were posted perhaps on Twitter are captured over here. And then simply clicking on any of those links will take you to the chart. With some of them will be annotated. There'll also be a video normally accompanying this. And these are generic ideas. These are specific trade ideas that we discuss in the room, and probably 85 to 90% of the ideas are presented here, but the critical 10% we withhold and obviously save that for our members. We recommended flat for the news and then react. We have no idea whether it's going up or down when we start. We do have an idea where we want to box it for our first framework to see that it trades within that, and then a breakout or breakdown would trigger new information and obviously react accordingly. So our initial resistance zone was the 2 to 4 target, the double top idea with a 3.5, and then on the bottom side we had that 96.5 the squeeze pivot support to 95 as the support on that side, and if that broke it would open the door to the downside. Of course, once we break to the downside, there's no clue that you're going to fall all the way down to the day's lows, but step by step you try to gather new information and make decisions accordingly. We have a number of tools that we use. This was one of the things that caught our eye yesterday, looking at the potential pivot point, a resistance zone, primary support at the 83 to 82 area. Once that broke, it opened the door to new targets, and S2 became 66.25. That would be an outside extended target near the gap. There's nothing more arrogant than hindsight. We need to make decisions in real time. Our first thought was, let's use that 85 to 82 as support and try for the half gap. We felt it was too low to short at the open, and better odds would be to try a bounce and then look for that 92 to 94 zone as strong resistance, come back and double test the 88.75, which was last year's high, and then look to take out that 88 hopefully and retest 85 to 82. Once we broke 82, we felt that the trend was down and we would not come back, and we felt we would be in a waterfall, or what we call a rabid dog day. So hit bounces was the call. Try to get into the waterfall, and then let's see where we would find ourselves by lunchtime. At lunchtime, I had already determined that this was our key resistance. Once we broke the 88s, became resistance, and then the 82s immediately became the first key downside resistance, and I did not expect to see that broken for the rest of the day. So the targets became one by one into the 70s. 77.25 was T1, which we had called, then potentially get down into that 74 area to 72, and we thought that that would be the key for the rest of the day, was what happens near the 72s, because you start to get into risk and reward ideas and profit-taking ideas by the end of the day. Seek made it very clear early on that his target was that 71 area, and measured moves actually came in at that 67 to 68.5 zone, and we felt that that was the right area to make sure you were paid, because we were coming into the end of the day. We still felt you could hit bounces and look for the gap, and we felt if you got to 68, be happy. 68.5, about a 50-point move off the highs. We felt that was substantial, and luck would be if we could actually close that gap at 65.75. Demon was 97, and when we get a very sharp fast bar down, that tells us something immediately. So that was our key resistance. Any bounces, even if they got above the 95 area, we felt they would be hit, and then it might be more of a range trade if we got that high. With the cruise control charts, I adjusted the pace to a 4-minute chart. I find when we have a rabid dog day, I need to go through a 2, a 3, a 4 before I even think about the 5-minute chart. So adjusted to the 4, I'd call that out. Let's use 4. It was absolutely perfect for containing the bounces all day long. Note the 240 chart, big idea of a target in here, that pink line. Once we broke the previous day's bar and the day before, lights out. Target became coming down between the red line and now the blue line. Note your XLF, usually a pretty good proxy for the market. 120 chart clearly in play for the NQ, and this is a representation of one of our primary charts. This shows us where in fact potential middles and resistance and support zones might be step by step. Each line is a step. I like to see bigger charts, but in fast moves and rabid dog days, we have our own rules. They're totally different from a normal range type day, and I like the 2-minute chart to show us the potential resistance zones and the pace and the speed, and the idea that once we're in a trend move, you're going to be wrong 5 times before you're right once if you're trying to guess against that trend. So initial trade, of course, as we talked about earlier, try to buy that and then look to reverse position and then sell it and hope we could break the lows, take out the 85 to 82, and then whatever the market was willing to go for the rest of the day. Troy came up with a nice statistic that said in the last hour we usually make a new low on a trend day, so that's why I made that call that the gap was available, but still you were going to be fighting for traders wanting to exit and take their profits from a great day of trading. Swing charts, we noted that 72 area was a previous shoulder, and we thought that that was an area that needed to get beat. That was a primary target in the way down, retesting an area that at one time had been a resistance zone and now wondering whether it would turn into support or not. Here's a better view of the 2-minute chart. You can see the dynamics we've already discussed. Here was our T1 target. Immediately we look, once we get to a target, we look back and we try to determine where the best resistance is step by step. That 88 obviously was a key. Once we broke through there, we said that's it for the day, we shouldn't break that again, and then we drop it immediately to this 82, and every arrow that I put here represents a resistance zone, and once we're moving downward, and we look for new targets accordingly. So T2 at 68.5, primary target, and when we began the day, our primary target was actually, let's hope to get to that 82, and if we can get past 82, and then 77 into the 70s becomes available, and any day low. A really wicked trend day is never going to come back and give you a big rotation. It'll give you small rotations, and that was one of the keys at lunch, that we really had a very small rotation, and we said let's hit, we're not going to fade this day, we're going to keep hitting bounces, and really skillful traders will keep adding as they go. I'm not as comfortable with that, I really would love to be better at that, but that admittedly is something I'm still working on, to keep adding in when the day is giving you the right to do that with accumulating profits. Rabid Dog Day has its own rules, as we've discussed, and one of them is to continue looking for the further targets to be hit. And you'll look to something like a 30-minute chart, and then you'll look to deeper charts such as a 120 chart and perhaps a 240 chart to see these boundaries being hit. And then the daily chart, we noted where this mid-uni was, right in here in that 70 area. So those all become targets as the day evolves. Yesterday's trade is called the umbrella trade, and truthfully, this is the picture of power. If you are under the green, the red, the blue, and the pink line, this is a home run type trade as long as you stay under that blue line. I like a 5-minute chart on Globex. If you're under the 5-minute blue line, you stay in the trade looking for short side targets. Once you get above it, then you'll look back to the 10-minute or a 15-minute chart. But below this blue line, as long as your averages are all lined up, green, red, blue, and pink, this is a solid trend day down, and we do not fade this type of day. This is a license to print money. Have a wonderful weekend all. Hope to see you next week, and be well.